So this is what's going on. Grant and his funds are being sued not by one, not by two, but by 4 different class action lawyers, class action law firms for alleged securities fraud. In this video, we're going to explore what this means for Grant Cardone and his investors. And to get started, all you need to do is smash the like button. All right, it's time to think like a marketer who thinks like a consumer. And this is the perfect situation of what I'm talking about, because these law firms are accusing Grant Cardone and his funds of making false and misleading statements and omitting material facts in connection with public offerings for 2 of Cardone capital funds totaling $100 million. Legal disclaimer time. Everything I say in this video is alleged, and there is no facts or proven facts at this time. Everything in the complaints are alleged, right? So everything I'm going to be talking about, I want to stipulate these are my opinions, and I'm creating these opinions or making these opinions from the alleged, from the alleged allegations, is that right? Yeah, from the alleged allegations in the complaints. So again, take everything I'm saying today with a grain of salt, because nothing is proven and everything is subject to change as these lawsuits proceed moving forward. So first of all, let's talk background information. What is going on? What is Grant Cardone and Cardone Capital all about? Grant, as you probably know, is a real estate investor. That's just one of the few things that he does. He's also a best-selling author. I happen to really like this book. New York Times best-selling author. He has Cardone University, but one of the things that he loves is real estate. And so he went from doing, single home investing to then he started doing multifamily home investing, which is apartment complexes. And from that, he created what he calls the Cardone Capital Fund or funds. And he's got a bunch of them, I think 1 through 5 or 1 through 6. And so what these funds are, they're kind of like a quasi-public offering. And so they go out and they raise money, and then with this money, they go out and buy real estate. And so the entire venture is backed by real estate. Got it? All right, so what the complaints are alleging is that in 2 of Grant Cardone's funds, that he misled the public. Specifically, that he went on to social media and started making these grandiose claims that he could bring people 2 times or 3 times return on their investment, and as a bare minimum, bring investors a 15% return on their money. Now, in the complaints, they're saying, hey, there's no factual basis for this. And therefore, these assertions are false and misleading, and therefore they are a violation of securities law, and therefore Cardone Capital and Grant Cardone have hurt the investors because they are being misled. They're being duped because of all this hype possibility of return, right? So that is, in a nutshell, what's happening. So one of the allegations in the complaint is that Grant started targeting non-accredited investors. And so before we continue, let's look at what an accredited investor is versus a non-accredited investor. So an accredited investor is a U.S. term used by the Securities and Exchange Commission, the SEC. And basically what they say is that it refers to individuals that are naturally high net worth, possibly a Bill Gates or a Mark Cuban. By the way, speaking of Mark Cuban was also involved in an SEC type civil litigation, and he prevailed in that. So I'm very curious to see what's going to happen with Grant in this particular case. Anyway, moving on. So an accredited investor, somebody who has got a certain level of sophistication, high net worth, doesn't need as much protection because he's been around the block or she's been around the block a few times, and kind of knows what they're doing. Plus, because of their high net worth and their sophistication, they might have a team of advisors to help them make these choices, right? To make the best choices in their investment portfolio. So therefore, again, they don't need as much protection. As opposed to, let's say, a non-accredited investor, the average Joe, you and me, we're not sophisticated enough. And because we're not sophisticated enough and our net worth is under $1 million, we have two strikes against us. A, we may not know what we're doing, and B, we can't afford to lose our money. So the Securities Exchange Commission has a set of different rules for soliciting non-accredited investors, non-sophisticated investors versus accredited investors. Does that make sense? So whether you're a accredited investor or a non-accredited investor, the nice thing is that you can still crush the like button. So go ahead and crush the like button now, and the algorithm will thank you for that. All right, let's go on. What you're allowed to do when you are raising funds is you are allowed to what's called test the waters. And you're allowed to test the water by doing this thing called test the water communications. It could be as simple as saying, hey, Bert, I'm gonna be putting a fund together to buy real estate. Would you be interested in something like that? That's a pretty straightforward test the water communications. And so what the test the water communication is all about is just a way for companies and people who are raising capital to confidentially, so to speak, gauge the market for their idea. Bottom line is that by testing the water, you can find out, is there a market for your product, for the thing that you want to raise money for? So if you start getting a lot of negative feedback, like people are saying, man, I don't want to invest in a fur covered sink, then you're not going to take the time and trouble to file the necessary paperwork with the SEC. So now you can do a more generalized public offering. Does that make sense? All right, so instead of me kind of telling you all these allegations, let's just go to the complaint and let me show you what they're alleging, and then we'll wrap up. All right, so this is just one of the complaints. And by the way, as I said earlier, if you want to copy the complaint, just go to the comment section, put in there that you want to copy the complaint or whatever, and I'll get you the link and you can check it out yourself. So they really are hammering Grant and Cardone Capital for using their social media as advertising tools and not using the correct language or disclaimer. And so one of the allegations here is in one of the videos, September 17, 2019, Cardone advertised that if someone invested 220 grand in Cardone capital funds, this would result in a $660,000 position in the fund. In other words, he's going to 3x your investment. That's a pretty bold move or a pretty bold statement, right? All right, so this is where it starts to, what do you call it? The rubber starts to meet the road kind of a thing. So here, he claims that investing, again, the $220,000 would allow investors to earn $12,000 to $15,000 a year in distribution. That's kind of like dividend. You're making money off your money. And so in this complaint, it says that in fact, this statement was materially false and misleading because there was no reasonable basis for this representation to investors, and distributions have in fact been much lower than these amounts. So they're actually looking at his past performance to predict future performance. And they're saying, wait a minute, how did you make that conclusion? All right, moving on. So here we have another one where Cardone told potential investors that he expected to sell underlying real estate property in 5 to 7 years, which is very common in these real estate funds, right? Because real estate goes up in valuation just like stocks do. And so it takes 5 to 7 to 10 years to make these things happen. At which point he expected that the 220 grand invested would be worth 660,000 plus. Your cash flow these statements, again, what they're saying are false and misleading because Cardone has no reasonable basis for claiming that a given property will triple in value in 5 to 7 years. Now, looking at the situation today, this is clearly something that Cardone, Grant, and Cardone Capital may be concerned with. Why? Because right now, real estates are kind of in a flux situation. Here we are, October 1st of 2020, and there's a lot of speculation whether real estate's going to go up or going to go down. And the nice thing about it, though, is that Cardone Capital and Grant are investing in multi-family dwellings, meaning apartment complexes. Most people are probably going to stay in their rentals for the next, I don't know, 6 to 12 months. There should be a cushion there, and who knows what the real estate market will do. And that's precisely what they're alleging in this particular allegation, that, you know, there's no basis for him to claiming that, hey, this is going to triple in 5 to 7 years. In 5 years from now, the real estate market could have crashed again. Of course, in 7 years, it could be back up to even higher. So again, they're saying, hey, there's just no factual basis. And I guess they have a clip of him, and this might be a YouTube channel. Oh, no, this looks again that it's a Cardone Capital Instagram. And again, you see the $220,000 there, the $660,000 there, $12,000 to $15,000 is right there, and then 5 to 7 years. So yeah, right there. Anyway, so this is what has got Grant Cardone and Cardone Capital in so much alleged hot water, right? The other thing is they're harping on the fact that Cardone Capital and Grant are talking about the safety of their money, right? So Cardone Capital further represented to potential investors that their capital would be safe in Cardone Capital funds because Cardone Capital is built on real assets, which are already established and stable in nature. Without sufficient warning, investors of the risk of investing in real estate properties in question. Again, real estate goes up, real estate goes down, just like, you know, stocks do. Just like any investment, you're always at risk. All right, so I'm not going to trouble you by continuing to read all this. It's more or less the same allegations repeated over and over again. And if you want a copy of this, I'll be glad to send it to you via PDF. Just leave me a comment that you want a copy, and I'll be glad to send it to you. It's really good reading, just as a precautionary tale, not to beat up on Grant Cardone. And I want to say this because I don't believe Grant Cardone is in any way trying to hook wink anybody, right? You know, Grant Cardone is what I call, he's using some puffery here, which when you're dealing with investors, when you're dealing with non-accredited investors, it's just not, it's not good. And so it could possibly lead to, you know, to trouble. So, and that's exactly what's going on, right? Again, I personally like Grant Cardone, and I do believe that he's got good intentions. And I believe that all of the stuff will be worked out, and it's going to cost Grant Cardone some money, bottom line. All right, so let's see. Let me look at my notes real quick because there's just a lot to talk about there. All right, so let's wrap this up. So what does this mean to Grant Cardone and Cardone Capital? It means that Grant and his funds are about to be crushed in 2 ways. All right, and number one, you're about to quadruple your legal expenses. So Grant Cardone, he's got a decent sized company, and he probably has a legal attorney, maybe 2 attorneys on staff. Maybe it's a small legal department on staff because he deals with a lot of stuff. He's a wheeler dealer, so he probably has a small legal team on staff. Great. However, class action lawsuits are a specialty unto themselves. Securities law is a specialty unto itself. A general practitioner, which is what most corporations have, are not going to be suited for this. So what's going to happen is they're going to have to go out and get a law firm, and not just a law firm that specializes with securities exchange, but with class actions, but a big enough law firm that can handle 1, 2, 3, 4, possibly 5, possibly 6 lawsuits at the same time. They're going to probably have to consolidate these lawsuits, which is what I see the first thing that they're going to move the court to do. And then on top of your expenses accelerating, because even if they settle this in a year, it could cost Grant and his team a couple of $1 million. So besides accelerating your expenses, as this is made public, well, you're going to have less investors going to invest in your funds. You might even hurt your other businesses. So Grant, as I mentioned earlier, is a best-selling author. He's a motivational speaker. He's got Cardone University, which goes around and has training videos and training programs for people around the country. And all of these things, I suspect, are going to take a hit. Matter of fact, as I said earlier, this is October 1st, 2020. They've already taken a hit. The pandemic is slowing all businesses down. So where Grant Cardone might have been doing several motivational events a year, he's probably not done that many this year. And so again, this is coming at the worst time. Sales are slowing down significantly. Expenses are accelerating significant. This is, you know, rock, hard place, right here, right? It's the worst type of situation that you want to be in. All right. So what do I think is going to happen? Well, what I think is going to happen is that somebody's going to come by and smash that like button. Please do that now. I appreciate it very much. But seriously, this is what's going to happen. In a situation like this, as I mentioned earlier, you're forced to spend millions of dollars defending these class action lawsuits. And if you've ever been involved in a lawsuit, lawsuits can take a life of their own. And sometimes, in fact, most of the time, it's just better to hurry up and come to a settlement. However, because this is a securities, a securities type lawsuit, I expect that the SEC is going to get involved, which is, again, is going to prolong or protract the situation, right? So he may settle with these law firms, but now the SEC is going to take him to task. And as I mentioned earlier, that doesn't necessarily mean anything. But in this complaint, one of the allegations that I forgot to bring about is that the SEC had told Grant that some of these things that he was saying in his social media were unacceptable. And they're going to take him to task for that. Not only is that going to hurt him, possibly could hurt him with the civil lawsuit, but it's possibly going to hurt him when he starts dealing with the SEC. So anyway, so as I mentioned earlier, he's going to accelerate his expenses. His sales are going to decelerate. And again, the third thing, I think the SEC is going to get involved. I think also in about 12 to 24 months, all of this will be settled out of court. It's really going to be the cheapest, fastest thing for Grant to do, for Cardone Capital to do. And let me tell you why. Because whether you're right or wrong, these lawsuits can become so expensive, and like I said earlier, they take a life of their own, that it distracts you from the stuff that you're really good at. So instead of you spending all your valuable time raising more capital, getting more investors, selling more training programs, doing more motivational speaking, maybe writing another book or two, your energy and your time can be distracted with these lawsuits. So you're better off cutting a check now and just moving on as quickly as possible. The other thing to take away from this is that be careful what you post on social media. Puffery can bite you in the butt. Making outrageous claims can bite you in the butt. Even if your intentions are good, what you post on social media can come back to bite you on the butt. Anyway, thank you so much for watching this video. Let me know what you think. Is Grant Cardone a good guy? Is he a bad guy? Do you think he's trying to hook-wink people? Is Cardone Capital doomed at this point? What do you think about these lawyers that are just jumping all over him? Like I said, at this point, it is 5 p.m. here in Phoenix. There's 4 lawsuits, 4 different law firms. I think that you're going to find another 2 or 3 law firms that are going to jump on here. Many analogies have been made about lawyers being like sharks. Right now, they smell blood, and that's blood is coming from Grant Cardone and Cardone Capital. So they're going to jump on the gravy train or the blood train or whatever. Anyway, if you want a copy of the complaint, leave me a comment saying copy of the complaint or complaint. And please, if you're not a member already, hit the subscribe button. And also, let me know what kind of videos you want. What I hope to do with this channel is I want to bring the information about business, about marketing your business, about managing money and growing your money. So, you know, really, I want to focus on those things because those are the most important things. If you have money and you have, more importantly, the money making you money, then you can actually have peace of mind. You can have what they call a, you know, coupon type of income or mailbox income or passive income. And that's really what a lot of us hope to do. And I've been fortunate enough to be there. I've done that a couple of times. And I would like to impart some of my wisdom, not only help you avoid some of the mistakes that I've made, and I've made a lot of mistakes and even created some new ones. And I've just about done every stupid thing that you can think of. So I can definitely help you avoid some big mistakes, and then also just help you get from where you want to, or from where you're at to where you want to be. So let me know what kind of videos you would like to see more of. And again, thank you so much. Please subscribe, like, and share this with anybody that you think might be able to help. Remember, my friends, you were created to succeed.